Hi everyone, it's Genevieve from Kangaroo Time. Thank you so much for watching the recording of our webinar right now. At Kangaroo Time, we create software for childcare centers. We're an all-in-one solution that helps centers grow their business, connect with their families, and effectively manage their staff members. Our software will help you automate your entire business, including payments, billing, check-in and check-out for children, keeping track of staff hours. We also do classroom automation, and this gives your teacher prompts while they're in the classroom to update parents on feedings, diaper changes, and developmental milestones. And it really hardwires the parents into the early education experience, and they get a beautiful feed of content right on their smartphones. So if you're looking for billing and a payment solution, a parent app, or staff scheduling, contact Kangaroo Time today. Thanks so much and enjoy the webinar.
Awesome. And it never fails. As soon as we go live, the sirens start. So hey everybody, welcome to the webinar. We'll get started in just a moment. In chat, let us know where you're coming in from. And Audrey, your background is more prolific than mine. Look at that. You're
Well, thank you. I created it in PowerPoint, just using PowerPoint.
Looks good. Looks good. Where are you at? Where are you calling in from?
I am in Delray Beach, Florida, which is in Palm Beach County, South Florida.
All right. Mary, I know where Gun Barrel City, Texas is. It's on the lake. I've been there. I've been out there. I used to do a lot of business out there, so welcome. Garland, Texas. Garland, I used to live by Firewheel Golf Course, Rhonda. Don't know the landmarks for Atlanta and South Florida. I do. But yeah, well, welcome everybody. We'll get started. I typically do an introduction, and we talk about a few things, and then I hand it over to our great speakers. We are so excited to have you as part of our webinar series. We do these about every other week. During the pandemic, we started doing these, and we were twice a week. And we've seen attendance drop a little bit, and that's a really good sign. That means many of you don't have enough time to jump on webinars. And your centers are coming back, which is great. But don't fear, sign up for every single one of our webinars, because if you do, you will get the follow-up email, which has the video on it. My name's Scott Wayman. I'm the founder and CEO at Kangaroo Time. Thanks so much for being here with Audra Wilson-Russell. She's the owner of Watts CPA. So just a little bit about Kangaroo Time. We know a lot of people are new to our webinars, so I would like to acquaint you with our company. We create software for child care centers, and we help you optimize your business, something that Audra is going to be talking about here in a moment. If you're looking to improve your child care center, we have some great resources on our blog, which I'm showing here. We have posts about increasing enrollment, retention rates, creating a financial plan, how to select your CCMS, and more. We recently did a 3-part Q&A, hang on, I'll show you, with Audra, on and covering various financial considerations for your business. So go here, and when it asks you if you would like alerts for when new content is added, add it, and you'll get that nice little non-invasive alert letting you know. And there's a wealth of knowledge here. We've been so fortunate to have contributors like Audra, Beth Cannon, Shira Leibowitz, Kathy Lignan. There have been so many thought leaders in early education do webinars for us, and then also act as contributors on our blog. And we're so proud of the embarrassment of wealth of content that we have here. I mentioned before, we also have a YouTube presence. Our YouTube channel is modest, but powerful. So we have a ton of content here. And if you're ever needing that lift, if you're ever needing that mindset change, please jump onto our YouTube channel. So starting in March, we started a number of content pieces and webinars that helped our owners, our directors, our educators out there really kind of focus on hiring, culture, financial forecasting, supporting families. There is so much content here, and more than anything, like today's presentation, it's great because it's organic, it's relevant, and each of you that has been there to participate in it. Guys, please share our stuff. When you get those follow-up emails, please feel free to pass those along to other folks. Real quick, about Audra, I'll get into her. Let me do housekeeping first, and then I'll intro Audra, and she will take the reins, and then I'll disappear for a bit, and then come back for Q&A and a few other insights. So certificates, don't send us an email asking us where your certificate is. If you're here and you're signed up, you will get an email sometime tomorrow, typically at the end of the day, with your certificate, also with the replay instructions, the link to the YouTube video. If you have questions, please put those in the QA queue here in the Zoom user interface. So click that, put in questions. Also, if you want to make comments, put them in the chat. We'll interject and interact accordingly. Your microphones and cameras are turned off. And again, we will be recording this. So Audra is a licensed CPA in the state of Florida. She has over 14 years of experience in accounting and taxation. Audra enjoys working with childcare centers and other small business owners to help them reach their financial goals. She has extensive knowledge with many accounting software programs and systems. She is also a certified pro advisor for QuickBooks. Yay, we have an integration with QuickBooks, and we love that. Online and Xero accounting software. So today, Audra will discuss the top 5 KPIs, and that's key performance indicators. So the top 5 KPIs every child care center should track in order to understand and improve their businesses. Audra, thank you so much. Welcome, and the show is yours.
Thank you so much for that introduction, Scott. And again, just thank you for the opportunity for me being able to come here and present to your customers in regards to the top 5 KPIs each child care center should track. I'm very excited to jump into the meat and potatoes of this presentation. So let's get started. Okay. So pretty much the agenda for the presentation, I'll just touch briefly a little bit about myself. Again, thank you, Scott, for that introduction. And then we'll go into the top 5 KPIs. And then we'll also look at industry benchmarks for those KPIs and a little bit more. And then we'll discuss creating a plan of action. Once you identified your KPIs and where you fall against industry benchmarks, then what is your plan of action for attaining your financial goals? And then I'll explain a little bit more about Watts CPA and the services we offer, and also how to get connected. So as Scott mentioned, I am Audra Wilson Russell. I am a graduate of Florida State University with a bachelor's in accounting, also from Lynn University with a master's of business administration. I am a certified public accountant here in the state of Florida, and I am the owner of Watts CPA firm. And my focus in the firm is childcare centers. I am a QuickBooks Online Advanced Pro Advisor, as well as a Xero certified advisor. And Xero is a competitor of QuickBooks Online, if you haven't heard of it. %70% of childcare centers are incurring substantial additional costs for staff, cleaning supplies, and personal protective equipment, according to a survey released in July 2020 by the National Association for the Education of Young Children. So why do I bring that up? I bring that up to say now is a very important time to kind of understand your expenses, to understand your P&L, know your numbers, so that you can control your cost. And one of those ways of doing it is by looking at your metrics to see how you show up. I'm sorry. Can you guys, you still see my screen, right? I think so.
Yeah, we can still see it.
Okay, all right. Thought I lost you for a while. Sorry. To control your expenses and also be consistently inside of your numbers. Which brings me to my next point of understanding your numbers. Many small businesses, they wait until the end of the year to meet with their CPA regarding their financial health of their business. So we recommend that you meet with your CPA to devise a plan of action for your child care center. So you don't only want to look at the historical reporting, which is the typical profit and loss statement, your balance sheet, and your cash flow statement, but you want to look at advanced reporting as well. And within that advanced reporting, you're looking at your KPI analysis, your profitability, some budgeting versus your actual expenses, and then also future planning, where, for instance, a cash flow projection, where you're projecting what your income is going to be, or all of your cash inflows and all of your cash outflows, which could be expenses or paying off debt or whatever it is, to see what your cash balance would be at a point in time. And that's very important because that helps you make decisions like, is it time to purchase a new van? Is it time to expand? Do I have the money to expand? Do I have the money to hire a director? Those types of decisions are based on future planning and not just looking at your historical financials. So what is a KPI? A KPI is a key performance indicator. And what it is pretty much a metric to measure the financial health of your child care center. So looking at your profit and loss or your balance sheet, and also seeing how you line up against the industry of other child care centers that are about the same size as you. And some of the ratios that we will go over today is for child care centers that are in the $500,000 to $1 million in gross revenue range. It's also a way to help you measure your financial goals and, again, to track yourself against the industry. So that first metric that I would like to jump into is the FTE, or full-time equivalent. And we're talking enrollments here. So your full-time equivalent doesn't necessarily equal the number of enrollments that you have. And so we'll see why in just a second. Step one in calculating what your full-time equivalent is to segment your enrollments by registration type. So you have Monday through Friday students who are full full day students or Monday through Friday students who are do this and section out your different levels. Your Monday, Wednesday, Friday students will classify as full day students. Actually, yeah, Monday, Wednesday, Friday, full day. Monday, Wednesday, Friday students that are half days, and then your Tuesday, Thursday students that are full days, and then your Tuesday, Thursday students that are full days. So we'll identify the different registration types first. Second thing is to determine the factor or the FTE factor per registration type. So for those Monday through Friday students that are full days, that's going to be an FTE factor of 1. Your Monday through Friday students who are half days, that's a 0.5, so like a half a student, if you will. Monday, Wednesday, Friday, full day, we'll count that as a half as well. Monday, Wednesday, Friday, half day, 0.25. Tuesday, Thursday, full day, we'll do half, and then Tuesday, Thursday, half day, 0.25. So once you've determined the FTE factor, now you want to multiply that factor times the actual number of enrollments to get your FTE. So SAMPA data here, exported from your childcare management software such as Kangaroo Time, where you just export into Excel your enrollment figures for that month or that period or whatever we're looking at here. And in this example, I have 29 students that are Monday through Friday full day, 3 students that are Monday through Friday half day, so on and so forth. So Monday, Wednesday, Friday full day at 0.5. And so once you identify your enrollment for each one of those periods, now we're going to multiply that factor times the number enrolled to get what our FTE is. So in this particular example, the FTE is 36.25. So you see we have 45 enrolled, but the FTE is actually 36.25. So again, your FTE does not equal or does not simply equal the number of enrollments. There's a factor to consider in order to come to your actual FTE. Number 2 is the enrollment shortfall revenue. And what this is basically how much money you have the potential to increase once you increase your enrollments up to your actual capacity. So if your capacity is 65, but your enrollments are 45, there's that 20 student kind of shortfall, and that's the revenue that you're pretty much missing out on. So to calculate your enrollment shortfall revenue, we must first calculate the enrollment shortfall. So in the example I gave, your license capacity is 65 minus your current enrollment of 45 to come to a student enrollment shortfall of 20. Next step would be to determine your average tuition. So there's a simple way of doing this, and then there's a little bit more complicated way. I'll go through the complicated way first, where you would list all your levels of your weekly rates, your infants, toddlers, preschoolers 3 through 5, and then take an average of those weekly rates. So in my example here, we have the infants at 210, toddlers 195, preschoolers 180, 175, 165. So if I was to take an average of all of those rates, my average tuition would be $185. And that's just the sum of all of those listed divided by the total number of programs, which is 5, to come at $185 for your average tuition. Or you could just take the price of your 3-year-olds at the 180 to make things simple. So once you've identified what that average rate is and what your shortfall is, now it's time to multiply them together to come up to your enrollment shortfall revenue. In this example, we've identified 20 as a shortfall and 180 as the average tuition. So once we multiply those two figures together, that's a shortfall of $3,600 per week. If we multiply that times 52 weeks in a year, that's $187,000 per year. And so I'm very well aware that functioning at 100% capacity isn't sometimes functional or the reality. So that 187 is not always 100% attainable. And then also looking at the 52 weeks where some weeks throughout the year you have off time or, holiday time where you're not necessarily billing the parents for that time. So this is pretty much the most that you would be able to recoup if you shortened that enrollment shortfall. All right, so number 3, employee turnover.
Audrey, we have a question. And it was about the last section. Do you mind if we cut in there?
Absolutely not.
So David is asking, when calculating the enrollment shortfall, why would you use 45 instead of the FTE of 36.25?
Well, we could use the 36.25. We could use the 36.25, but if your capacity is 65 bodies, then the most you could have is 65 bodies. So if you were to enroll 20 more people, you're at your capacity regardless of the actual FTE that represents those 65 students, if that makes sense. Okay, so employee turnover is the loss of talent in the workplace over time or over a period of time. And that loss of the worker could be due to a resignation, a termination, a death, a retirement, just anyone who worked for you who's no longer working for you. And it's a means of predicting the impact of your productivity, your customer service, as well as company morale. So to calculate that employee turnover, the first thing would be to identify the total number of positions throughout the company. So, and this is everybody from the 3rd-grade teacher, the 3-year-old, the 2-year-old, everybody, every position within the company. So let's use an example of there are 12 total positions within the childcare center. Second thing would be to identify the total number of employees that's worked in that time period. And again, this is active and terminated. So if they're no longer with the company, but they worked during that time period, you definitely want to count them. In this example, we'll say 21. All right, and so if we took those numbers, we're gonna divide the total employees that's worked during that period, divided by the total number of positions that are available. And in this case, it comes to 1.75 or a very high 75% employee turnover. So when you get a very high percentage like that, then that's would be one of those goals that you would want to decrease the employee turnover and also investigate as to why the turnover within your center is so high. Okay, the fourth one is payroll expense as a percentage of revenue. So tracking this, your payroll, is to see if you're in line with the market and the industry. Are you overpaying your staff, or are you underpaying your staff? Are you overstaffed? Did you hire too soon? So this KPI is a very important method of tracking that kind of intel into your business. And so in order to do this, you're going to take your total payroll expense and divide that by your gross revenues. In this example, the total payroll expense is $325,850, and that includes benefits for employees, the officer's compensation, payroll taxes, staff education, and wages. Anything that's related to retaining those employees would be classified under payroll expenses. Okay, so you would just, I think I'm missing oh no, there we go. All right, and so for the total gross revenue, in my example, the gross revenue for the year through September 2020 is $598,100. So then you would take that $325,850, divide by the $598,100 to come to a 54.48% of your for this KPI. So your payroll expenses are 54.48% of your revenue. And then the final KPI is looking at your program expenses as a percent of revenue. Also, again, important to kind of see where you line up with the industry and what are some things that you're doing within your program that you may be able to switch up to control cost. And this is total program expense divided by the total gross revenue. In this example, program expense includes things like advertising and promoting your child care center, your cleaning and supplies, dues and subscriptions, field trips, your meals, your paper products, program supplies, uniforms for your teachers, and also the vehicle expenses, the fuel, the insurance, parking, tolls, repairs and maintenance. So in this example, we come to a total program expense of $67,557. Total gross revenue again is 598,100. So once we divide that 67 over the 598, we come to a percentage of 11.3. Program expenses are 11.3% of revenue. And then I know this is the top 5 KPIs, but I just wanted to, as an honorable mention, bring up, you also may want to track facility expense as a percentage of revenue, and then your general and admin expense as a percentage of revenue. Also consider tracking your break-even margin of safety, which what that break-even is if all of your revenue equal all of your costs and you broke even, so no profit, no loss, but $0. That margin of safety is pretty much how much of a buffer do you have before you break even. So, keeping track that margin is also a good idea. And then also your gross profit margin after subtracting your program costs from your revenues, what's your gross profit to pay your operating expenses. Okay, so now that you've identified the KPIs and you're tracking them, what's the point? So what are you tracking them against? So now we're going to get into looking at some industry benchmarks specific to childcare providers within like the $500 to $1 million revenue range. All right, so based on all of the KPIs and the data that we went through, this is what a KPI report would look like. So here we're tracking the total revenue for the company lined up against industry benchmarks. The typical revenue for that $500 to $1 million range is about $742,000. The gross margin is 89%. So here it'll show you that your gross margin is 88.16. So you're missing this target just slightly by 0.88%. After tax, your net profit after tax margin is 7.2. Typically it's about 5.95. So you're doing better than your competition, almost 2% better. And then payroll as a percent of revenue, you're a little bit high compared to industry, where industry it's 50.69. So you're going upwards in like a negative kind of trend versus the industry. And then so on and so forth with facility expense as a percentage of revenue, where here it's 15.96, industry is 20%, so you're doing well there. And let's see, program expense, the 11.3 compared to 10.96, so slightly higher than the trend by 3.34%. Employee turnover that we calculated was 75%. Compared to like industry standards, 40% is the norm. So extremely high, higher than the industry. And then here's just some enrollment details, where here your capacity is 65, current enrollment is 45. And so I put 59 here. Like I mentioned at the beginning of the call, is it really attainable to always be at 100% capacity? So in this example, your target wouldn't necessarily be that full 100%, but a portion of it. And so that's what that is. And so the shortfall would be a goal of just 6 students less. So instead of being at 65, you're looking at and attaining the 59 students. So your goal is to just at the very most have a shortfall of just 6 students. And here it's 20. So of course, this is going in the negative direction. And then your FTE, again, you want to get to that 59 and you're at 36.25. And so that shows the difference. And then the enrollment shortfall, if you had a shortfall of 6, then that shortfall revenue would be the 56,160, but you're here at the 187,200, which is a 233% difference.
Audra, Nancy asked here, where did you get the industry benchmarks from? If you can share that.
Yes, so I pulled the industry benchmarks from BizMiner Market Report. They have benchmarks on different industries, different revenue sizes, just a lot of industries, the reports for benchmarks. Okay, here is the KPI Explorer. So this is a report that I would typically give to a client to visually see their KPIs. We just looked at it from like a financial reporting standpoint. Now this is more like a visual kind of standpoint. There's 13 KPIs here listed, and it gives you the breakdown of 9 are off track, 4 are on track, so that's 31% that are on track. And then the way that we classified them, the order of importance, where the medium important was what's the revenue, what's the gross profit percentage, the net profit after tax, and then our higher important was the payroll as a percentage revenue, center capacity, center enrollment, enrollment shortfall, facility percent, program expense percent, and G&A percent. And then those critical ones, the ones that you definitely want to keep an eye on, the FTE, employee turnover, or shortfall. And the order of importance is based on what your particular goals are. So you may be to a point where employee turnover is not as critical to track as program expenses. So that's definitely something that could be changed so that your more critical items are here to the right. All right, and then there's also a goal seek function that we do with you. So based off your goals and what you're trying to accomplish, if you're trying to increase your operating profit, in this example, from $47,510 to $85,000 this year over next year, then what we would need to do to achieve that goal is either raise your prices, increase your volume, decrease your fixed expenses, or decrease your variable cost. So in this example, it shows us increasing volume, so the number of students, by 5%, and decreasing fixed expenses by 2.34%. So if you did both of those things at the same time, then you would reach your $85,000 operating profit goal. So going from the 47 to the 85 if you did those two things. All right, so once you know what your financial situation is, how things look, you see that maybe you're hitting below the industry benchmarks and you just want to make some improvements, the way to do that would be to create a plan of action. And in each plan of action, it should have these elements: a description of the issue, a recommendation, action item, an assignment of who will complete that action item, a start date, and a due date. So in this example, let's say an issue could be that you have high general and admin expense compared to industry. A recommendation would be to review your monthly expenses to identify where to trim the fat. An action item would be to review the profit and loss line by line, contact those vendors, negotiate rates, buy in bulk, and several other things could be action items to help you achieve that goal. Who will complete? Jane Doe. Perhaps Jane Doe is the director, or you can assign it to whoever, but it definitely needs to be assigned to a person in order for it to get done. A start date so that Jane understands how soon she needs to work on it, and a due date so that Jane understands that it needs to be completed by a certain date and time. A goal without a plan is just a wish. So you want to make sure you put that plan in action for your center goals. Now, about Watts CPA, we are a virtual accounting firm. We offer the CFO advisory, outsourced accounting, and tax solutions primarily to childcare providers. We're very passionate about helping our clients achieve their business goals. Some of the solutions that we do offer under the advisory section, there's business advisory. So just talking to you about your goals and what you want to do, putting those plans of actions in place to help you achieve those. We offer budgeting, cash flow forecasting. So is it a good time to buy a new piece of equipment? Do we hire a new teacher at this time? That would fall under there. And then advanced reporting, some of what we just went through. And then of course, the typical accounting and bookkeeping on a monthly basis or quarterly basis, and in some cases weekly. And then we also do the regular compliance, the tax returns, and then also tax planning. And then we offer various other services such as bill pay, invoicing, app advisory. So a lot of our clients are using online platforms, and those online platforms connects to other apps such as Kangaroo Time. So as a service, we offer what's called app advisory, well, where we'll kind of like do the research and legwork to see how things integrate with each other and help you get connected. And then we also offer payroll and cloud accounting migration. So for anyone who's still using a desktop environment for their accounting system and is looking to get converted over to the cloud, we offer that as well. We're everywhere on all of the social media platforms, LinkedIn, Facebook, Twitter, Instagram. We have a YouTube page that's just full of videos that will help you in your small business and, you know, just doing different things there, educational videos for you. And then we have a special offer for you today. If you email KPI to info@watts.biz, the first 20 people will receive a complimentary KPI analysis benchmark. So we just went through the benchmarks and the different KPIs. So we'll customize a report that's specific to your child care center. And of those first 20, the first 5 will receive, in addition to the KPI analysis, a plan of action for your top 3 goals. So once we identify what your pain points are and where you want to improve, then we'll help you get on track with those top 3 goals. And that is all for me. I do thank you for your time.
Audra, real quick, I'm going to ask you to stop sharing. And I want to put an explanation point on a few things, and then hang tight. We're going to get to questions. So I just noticed that somebody asked in the QA. We offer scholarships to low-income families that do not qualify for government help. Because of COVID, we are right now offering 70% off regular tuition. How should we report that for audit? So just real quick, I wanted to show in Kangaroo Time, we have something called billing plans, and we believe that you should bill each and every family at an MSRP, or like at the manufacturer suggested retail price, right? And then you add discounts. So if you go over here to charges, we have an area that's called automatic charges, and this is where again, Kangaroo Time kind of flywheels and automates your billing. So the plan will run, and then the family will see a subsequent discount. And we think that obviously that has a couple of functions, right? Like you want your families to see the value that they're getting and the grace that you're extending in this tumultuous time. And then for audit purposes, you want that net dollar amount, and you want your reporting to show exactly how much you're discounting out. Audra, any thoughts there?
Yes, so I always recommend when you are providing a discount or something like that to a client or student parent is that you always record it at that gross level. So, and then for the discount, because it helps with reporting as well, or future billing or future invoicing. And, you know, it also helps to see how much you are kind of giving away, you know, to know how much of a discount that you're actually like giving away, how much revenue you're giving away.
Hey, and there's a book. One of my good friends, Chuck Gibbs at Childcare CRM, he always says you can't manage what you can't measure. So again, I was just showing a screen. You know, one of the things we're really leaning into is allowing our owners, directors, all our stakeholders, if you have multiple locations, build out your KPI dashboard like here. build them out so that when you log in, you get an instant orientation into what you're measuring. And real quick, guys, so for those of you that joined late, my name's Scott Wayman. I'm the founder and CEO at Kangaroo Time. I want to share a couple more things with the software, and it'll take me a minute or two. And then, Audra, I've got a few more hot seat questions for you. So just get ready, woman. Get ready, because I know, no, they'll be very conversational. So guys, many of you are rapidly drinking from the fire hose of the new normal. I wanted to just share that recently we launched our health check, and we integrated our health check into our parent app. And another thing, for those of you that are using those old antiquated kiosks and having parents bio ID in, we have a solution for that. So our parents, they log in and log out, or they check in and check out, sign in, sign out through the parent app. And you can add a questionnaire for COVID, some advice too. And you can see here the workflow is interesting. So if everything's copacetic, your child can pass through the golden doors of your center. And if not, we're going to have a conversation. But this allows you to adhere to all the guidance that many of you are trying to limbo and really kind of comply with. And more, first and foremost, keep your staff and your team safe. And then also, I wanted to mention our staff management tool. So, something that we've built that's a replacement for When I Work or Where I Work or Sling, or there are a few of you that are using Home Base. We feel like we've built the best platform for scheduling staff in all of the land. One, it's childcare specific. So it understands your rooms, your ratios, the staffing needs there. It's intelligent. It understands who's put in for vacation, whether or not they have the time, the accrual. It's super intelligent. And this is our first step to moving towards a fully functional HR information system, which down the road very soon will include payroll. So Audra, we talked a bit about payroll and your metrics there. So imagine your management system being closely married to who you staff, when you staff them, the children that you have booked and scheduled in your centers. So that's huge. And then, of course, I mentioned the parent app, and I will shut it about the components of Kangaroo Time, because we have some important questions to get to. So Audra, I understand that there are resources you can share with folks here to help start this process. Can you tell us a little bit about your Facebook group?
Yes, so a growing Facebook group right now. And so what the goal is there is to kind of create an environment for directors and owners to learn more about the business side of childcare. That's the name of the Facebook group, the business side of childcare. So you guys have like the educational component, that kind of stuff on lock, the compliance when it comes to certifications and things like that. But this is more so from like a financial standpoint and understanding how to operate, how to fiscally operate a child care center. So in there, there's educational things on how to get your vendors to complete a W-9 the correct way. What's the difference between having an employee versus a contractor? So those kind of accounting questions related to running your child care center.
Got it. So you've been working with a number of clients across our segment, across the vertical. What are you hearing? What sort of challenges are most of your centers facing? I know the benchmark was 50.69% of revenue is personnel or your employee expense. Are there any metrics out there that are out of whack? I know our latest numbers have shown that 97% of our centers have opened back up, which is exciting. But each of our centers is processing, as far as payments, between 60 and 65% of what they were in January. Any other interesting insights?
So what I would say, like one major thing, and it's really no secret, is from a personnel perspective or a staffing perspective, where you still have teachers that are afraid to come back to work. Either they're afraid to come back to work or they just can't come back to work because they're homeschooling their kids who are home-based education. So the talent pool has been an issue for some of my clients where they just can't get people back into the classroom. Even if they could open back up at 80% or 100%, they just can't because the ratios aren't in order.
Audra, I met you at Kathy Ligon's Shift conference, and I actually sat in for my advice as far as getting information in places like your Facebook group, gatherings like Kathy's, like the Shift conference. Do you have any other golden nuggets out there that are great for acquiring knowledge? I mean, at Kathy's conference, there were a couple of sessions I sat in that only dealt with the profit and loss statement of childcare centers, and for me, as a CEO providing software, it gave me so much more depth and insight.
Mm-hmm.
Are there other groups, consortiums that you would recommend?
Yes, so I would definitely recommend the Facebook group that we discussed. And then there's also Chris Murray's Childcare Success Summit. That's actually, another great source of wealth and knowledge within the childcare industry. And then there's also that the trusty YouTube, YouTube University, pretty much to kind of see what's out there, who's talking about the childcare industry, if you can find things to educate you on things that you just don't know. Everything is pretty much on YouTube these days.
Yeah, I hear there's a great little conference in Buffalo in July, put on by a really interesting software company that will have hundreds of people there next year, and we'll make sure that we do some in-depth sessions on P&L, because I think the new normal, it really challenges each and every one of the owners and directors and stakeholders on this call to rethink how they operate, how they do things. But again, we'll have more news on that, and it's going to be fun.
Looking forward to it.
You will be there. You're going to do a session for us. You promised already. Well, even if you didn't, you're doing one. All right. So final question. So we know, we call it, and no offense to anybody that's had like a trial or tribulation, but we get so concerned with being in the moment and so overwhelmed. And I think many of us, we shut down during tumultuous times. And one of the things you've said throughout is, one, you've got to have a goal. You have to have purpose. For me, the starter for myself is just looking at those numbers and finding the time. It seems like they fall by the wayside, looking at my cash on hand, strategizing. One, it provides a lot of stress, but how do you advise people to carve out the time to do it?
Well, the big carver would be to outsource it. So
Okay.
if, don't try and do everything yourself. And if it's not your expertise, you want to outsource it. Delegate it to someone on your team who has that skill set to do the bookkeeping for you, or outsource it to a local CPA firm or one that works virtually. You have somebody that's dedicated on just focusing on the numbers, getting them together, so that the only thing that you have to do is be present at the time that the numbers are being presented. So you're not behind the scene doing all the grunt work trying to get everything together. So a huge time saver would be to delegate it or outsource it.
And Audra, I think that's beautiful advice, because operators need to be operating. But I will suggest something that's helped me personally is you set aside 1 hour a month to do a readout with your professional. So Audra, if you were my contract CFO, I would make sure we had a month over month scheduled time so that we could just chat about anything that's odd in the profit and loss statement, because those are kind of like great conversations to have to put you into the active mode, or instead of reactive.
Right.
So yeah, that's great, Audra. Well, thank you. And by the way, I get in trouble so often that my wife has shortened telling me that I'm in trouble with her. She just says Trubs, like you've gotten yourself into trouble. So I think I got myself into trouble with Genevieve. I can tell from her tone in the chat. I probably wasn't supposed to bring up the bounce conference, but oh well.
Man.
Genevieve, you can slash my salary.
You're in trouble.
No, you're not in Trubs, Scott. You're not in Trubs. But we hope everyone can make it. We're not talking too much. Scott and I have been skirting around, in-person conferences and everything, but we're thinking we talk about this once a week, but I think we're feeling pretty confident right now that in July, we're going to host our customers, non-customers, everyone here in Buffalo, New York for a great 2-day conference. So if you've joined our mailing list, you'll hear more about that. So we are really looking forward to hosting people.
So yeah, Audra, want to thank you so much for the content. Really good stuff, really relevant right now. And to all of you out there, we love you. We are so inspired by what you do day to day to build bodies, souls, and minds. And stay out of trubs. Just stay out of trubs. No, please reach out if we can be of any help. And we will we'll respond quickly. So thanks, everybody. I really appreciate it. Take care.
Absolutely. Thanks for having me again.
Yeah, you bet. All right. Thanks, guys. Have a good one.